What is up, everybody? Logan here again with another video coming right at you. And I'm with Halcyon, also known as Uncle Luis. And he's back for another one. We're going to show you guys how we like to short the market. A lot of things that we use, what we take a look at. We have SPY currently pulled up. We have a few indicators like the RSI below, our GTM squeeze. And I really like your new blue background, by the way. But I really appreciate you coming back on for another video.
No problem, homie. No problem. Let's I think shorting is somewhat relevant, actually very relevant in the current market. And so let's talk through this. And as we watch this going green, go baby.
We're actually going to go green on the day. We were just down 0.3% like not even 5 minutes ago.
Look at that go. Oh man. All right, that's good news. That might give us a nice transition day.
On the wrong way, Chip.
That's what we need. All right, so shorting is actually not terribly complicated. I mean, you can obviously make anything uber complicated if you want to, but the reality is with shorting, it's really about being aware of two areas or two key ingredients to it, and then just pulling the trigger when you see it take place. So I'll just talk about how I do shorts, and specifically we'll do it from a stock perspective. If we want to talk about it through an option version, there's a bunch more ways you can go about doing the quote unquote shorting of an option or of a stock via options. But we'll talk through the stock side of it this time, and then maybe unpack the option way of doing it next time. So with stocks, in this case, we're looking at the SPY. Obviously, you can short the SPY if you want to, but I like to use basically two main ingredients, so to speak, to do shorting, but it always starts with your awareness of what the market's doing. Generally speaking, you don't want to be shorting in a strong uptrending market. That's sort of you're just asking to get your teeth kicked in at some point. And that's a frustrating experience, much like trying to go long in a downtrending market. That is equally a frustrating experience because you continuously get stopped out. Or what we've been seeing a lot lately is that we only get a couple of days to that upside, and then it fizzles out right away, and then continues the downtrend. And whatever way the market's actually going, in this case, it's been down for since the beginning of this year. So a couple things that I use specifically for shorting, and I have them all loaded up here. One is I'm using a custom daily VWAP. So normally speaking, when you look at VWAP, most people are using it on, say, like a 5-minute chart, right? So that's telling us the current volume weighted average price for the day. So here's like the 5-minute of the SPY currently, right? So we can get an idea. This particular one obviously starts, you can change the time to whatever you want it to start at, start of the day. You can start it earlier, 9 a.m., whatever. But anyway, you pick the time you want it to start. In case this is 9:30. And then it gives you roughly the range by which the volume weighted average price is for that particular day. And that's how it's normally used. And then these lines above and below are just the standard deviation markers. They're two, actually, no, these are three up and down for the day. So you can roughly get a running track of 3 moves up or 3 moves down in the standard deviation, and get an idea of roughly how far each move goes before it takes a rest and then moves up again, right? And generally speaking, most of the time, the standard deviation will encapsulate any move up and down before it needs a rest to come back up. All right, so that's how it's normally used on the shorter time frame. But on the daily time frame, what you do is you set it, you anchor it. So it's an anchored VWAP, and you anchor it 1 year from wherever you currently are. I usually update it once a month. So this one is anchored on 9/1. For 21, and then the next month I'll anchor it on 10/1 and just keep it going forward. And what it does is gives me a visual representation of where a lot of the volume is as it relates to price on any given particular stock or index. And then I will get a really good idea once the trend is defined where my support is via the volume weighted price, and where my resistance is once you start going one way or the other. In this case, you can see a somewhat obvious one let's do a little fun drawing right there. That's a pretty obvious area where we're going to smack into support or resistance in this case. And on this end of it, right, support, and then what do we hit? January. And then we break through that, and next thing you know, we're falling through that over and over again. right? What was support becomes resistance, yada yada. Right. This is just basic technical analysis 101. So once you get an idea, in this case, when you're below your anchored VWAP, once you know you're below it, that gives you a couple of actionable items to use. One is whenever something's below, that's where I'm looking at making shorts. I'm setting up shorts when I'm below the VWAP. And when I'm above it, then I'm looking at buying where the support is. So if I'm below, I'm looking at selling where resistance is. And if I'm above it, I'm looking at buying where support is. In this case, generally speaking, support will usually be the VWAP itself or right around where the 50-day moving average is. For most stocks and most indexes, they tend to follow that. And it's not because it's anything magical with that. It's just that everybody and their brother or sister have all bought into the idea that the 50 moving average is just the thing for support. So it's the psychology of the crowd following along, and that's what tends to happen, right? But on the shorting end, once we get underneath, right, the VWAP, which really started happening here, and this was probably, this is like what, or mid-January. Yeah. Then you need to be switching your mind, your frame of mind around, saying, okay, I need to start looking at finding setups that are shortable setups. Okay. And there are two ways that I like doing shortable setups once we get under the VWAP, because typically if you're in a sustained trend down, generally speaking, you stay under that VWAP for quite a while before it flips up. And we can go throw some other symbols in here in a minute and just pick whatever random stock you want to look at, and you'll see opportunities of how this unfolds over and over again. Okay, so the first thing is the first retracement. Once you fall pretty well below your 50-day moving average, right? In this case, you fell down pretty hard. Once you fall pretty well below that, your first main retracement back to the 50 is usually a pretty safe bet to take your subsequent first short on that position. Okay, it had been quite some time where we saw really any meaningful selling in the SPY or SPX, and once that first kind of confidence gets broken, usually you're going to have a wall of people who are looking to sell once it gets back to that, again, sort of status quo 50 moving average support resistance deal. And so that tends to be a pretty decent opportunity to do that. And all you do is just, once you get really close to that 50, ideally you kind of get right to it, maybe pop a little bit over the top of it for a second, take your short, and then you put a stop above that, whatever is your appropriate risk for you. Typically for me, I'm not willing to risk a lot on a short position. So generally speaking, I'm going to take a big position on it, but I'm not going to give it like 10% move. I'll give it maybe 1.5% max, because I'm expecting to be right. I'm not guessing this. I'm not saying, well, I feel like we should be getting short here, and Uncle Lewis says I should be shorting because I heard him in the back break room talking about it. No, like I'm feeling confident that this is the right move to do because I've seen this play out over and over and over again, right? I've studied the charts over and over and over and over again. I've seen this happen all the time, right? So that's why I'm willing to give it a very, very little bit of a room to work with. Okay, so that tends to happen is, and the more you can get things stacked on top of each other, for example, like this VWAP and the 50 are kind of close to each other here. This gives you more, room to say, okay, I know there's some pretty big resistance in this area, so this is a good place to take a shot at this and see how it unfolds. Generally speaking, I typically will short stocks and not so much the indexes. The indexes don't move fast enough. They're kind of boring here to do this with. But this movement, down like this would be 10 to 15% on a stock, where here it probably was like 3 to 5%, on the actual index itself. So this would have been an awesome place to take a short right there. A pretty good risk reward, right? And that's all we're doing is just trying to find risk reward setups over and over and over, right? We start, step one is be aware of what condition we're in. We're in a downtrending market. Okay. So whenever we're trying to do counter trend trading, you got to be super careful of that. So what you should be more likely doing is trading with the trend, which is just waiting for the short setups to take place when you're doing the stock side of things. Obviously, with options, there are some different animals that you deal with there. And again, that's more than what we want to get into in this particular video, but that's how I would go about doing this. The other way I like doing the shorting, which is actually my preferable version, is if you can get some kind of meaningful jump out of the, out of this, and you actually push over the 50-day moving average, Usually when it comes back and fails to hold it again, that's a really, really good low risk short setup there. This is my most favorite version of doing this. The one where you come up and you just touch the 50 and go right back down, that's less of the probabilities from everything that I've studied on this. You don't have as much of the probability of working out. Whereas if you can go over it and then come back and go back through it, you have a really good chance that you're going to have sustained downtrend for a while. And I bet you anything, if we were to take a look at this time frame, like March 30 to early April, and start looking at individual stocks, you would see some really significant sell-offs taking place around this time frame, which would have given you some pretty good heads up and pretty good opportunities for shorting. Alternatively, again, if you are using the anchored VWAP, the daily version, which is not common, that's for sure. Oh wow, look how fast we just dropped back now. That's hilarious. When you do run up to the VWAP and you've been way below it for quite some time, this is almost a layup short here too, right? And I'll be willing to bet we can go look at a whole bunch of charts and you'll just see that same pattern play out over and over again. Early in the downtrend, usually the first time you go below the 50 and come back over it and then go back below again, that's a great classic short setup. Or if you've had sustained downtrend and then you run all the way back up to the VWAP, that's another really, really low risk setup for shorting. Sometimes you'll get some, cues and heads up where your RSI is pretty extended, 74, 75 range, but not always. Volume in this case is not all that really helpful unless you've been seeing some specific criteria that's stock specific, but each stock has to have their own they only have their own personalities of how they do this. So I don't want to get too far into that. What you don't want to be doing is certainly shorting when you're in the midst of a squeeze. That's sort of, that's an obvious no-no. So like in this case, if you're watching this saying, oh, I'm going up over the 50 and I'm going to go back below the 50, you would have some cues like, hey, RSI is expanding up. Well, I forget this indicator down here, the Mox Daily, but your squeeze is also presenting, trying to go positive. This would be, again, a low risk reward probability this is going to work out. And most likely you're targeting, can I get to the VWAP range and then short this thing? So with shorting, again, that's my bread and butter. That whenever I take a short, and it's close. Wow, look at that sell-off. That's unreal.
Almost up to a whole percent in the since we started the video. That's
up 1% and down 1%, man. Crazy. So yeah, I would say again, as you get, the best way to ingrain this pattern into your mind is to just take a look at chart after chart after chart, study this, so that as you get really, really comfortable and really familiar with what the short setups look like. So for example, let's just take a look at a couple of random stocks, right? Let's take like Tesla. Okay. So Tesla, right now, here's the VWAP from a year ago. And we start kind of breaking down here. So here's our kind of like first major fall, pretty well below it. You pop back over the 50. And then the first time you break back through it again, there's your short. This is what you're looking at here, right? You also went through VWAP again there too. Go pretty well below your VWAP. And then the first time you get up to the VWAP again, there's an opportunity to short here as well. I don't know that you would have made a whole lot of money on this one, but again, that's the opportunity. Now this right here, right? We went above, held. Now, if we go below the 50 here, this is a short setup for me. I would absolutely look at one shorting here. RSI is not going up with me, so I'm not going in this trend. Kind of not much nonsense on the squeeze, and volume is not a whole lot to write home about that. Let's just take a look at, say, like Adobe. Also, we know tech has been hurting the most in this, so doing this with tech is going to be probably your best bet. Is healthcare and tech related, and consumer discretion is my favorite three areas to look at shorting and going long too. I mean, that's where like 80% of moves that are real sustained moves typically come in the tech industry, or rather than those three areas: tech, consumers, and healthcare. So like I said, we just literally throw on whatever symbol falls in those categories, and you'll see that exact same pattern showing up over and over again. Let's take a look at Amazon. I think they had a couple decent setups. Yeah, so Amazon was a really good setup here. So right here, right? So we fall, we push back through the 50 for a hot second, right? So you kind of fake people out that it's breaking back out. And then that first time you start falling back below, you put your short on, put a bit of a stop on there, and then boom. You get all this. This is all just shorting here. You go ahead over here, right? Same thing. You come up to the VWAP and you can short up in here. There's also an interesting methodology for this when you're looking at shorting stocks is you obviously want to short things that are beat up too. So like, again, what's in motion tends to want to stay in motion. So as you scan, go through whatever you're looking for to find the stocks that make the sense for you to want to short or long in, when you see something that's really beat down, think like 20% in a matter of a couple of days, those are going to tend to continue going down. And there's a really, really valuable pattern that shows up where it will fall quickly, anywhere from 10 to 20%, have this kind of 1 or 2 days of like very flat to maybe go back up 1%, and then restarts that tracement for another 10 to 20% down. Those are like the magical shorts if you can find them. Those aren't technical related at all in any sense. They're not following VWAPs or 50-day moving averages. They're just from a price pattern perspective. And I wish I could find one off the top of my head to grab one that would make sense there. I'm trying to think of who was a dog recently.
All right. We were talking about stocks to look at. So you have 3M up now.
Yeah, because I like how they sticky things they make. That's all I have for it. I'm trying to find a decent week structure, but
give me D-Dog. Data Dog.
Let's see, but this is being kind of a waste of time reading this. But again, we'll just reiterate some points. I should have been prepared and had a few of those actually queued up so you could just see what they look like. But there's a couple sort of crappy versions of these. But again, back to the shorting idea. Once you break pretty significantly below that VWAP and the 50, obviously is usually they're trying to be right next to each other. Then you get the parameters for, all right, we are in short setup land. And because you are, of course, every single day taking a look at what is the context of the market that I'm currently trading in and beating into your head that it is either a long trending, a short trending, or a no trend market, then you will have a very clear plan as, all right, I'm looking for short setups, or I'm looking for retracement setups, or I'm looking for long setups, whatever the case is. And in this case, obviously, here's January, right in the middle. We know that the market's now downtrending at this point. We get a retracement where we cross back over the 50. And what do? We run straight smack into that VWAP. And this is just, like I said, you could have done it two ways here. You could have watched this and said, this is all this stalling that's happening right here. There's a super high probability that you're going to fall from here. You're not likely going to blast up out of that range. So you could have either took your short here, put a stop either, maybe 1% above the highs, or you could have waited till you start breaking down below the 50 and take another stop and taking a short there, right? You always sell into strength. Right now in the current market, we've been dealing with 3 to 5 day bursts, both directions. That's just what it is. It's been doing that for months and months and months at this point. Obviously, SPX has been volume, so there can't be a volume weighted on this thing, but if we pay attention to how the movement has been with broad markets, it's roughly 5 or so days of one direction with a retracement or a pause, and then a continued 5 days of whatever that direction is. And that just has been repeating itself over and over again. So once you get yourself in tune with that and get really honed in, you can give yourself a pretty good edge here. And honestly, that's what we're trying to do, right? We're just trying to give ourselves an edge over and over again with what direction this market's going. We're not married to any one direction. It's just, what do we get the edge with so we can make money? That's the end of the day. We've said this so many times. It's not about being right. It's about making money. And so in this case, right now, let's just real quick, where are we right now? We're at 1, arguably 2, 3, 4, up day, 5, 6, 7. So roughly almost 7 days or so of down. I would not be surprised if we're going to see maybe one more little flush down, and then we have a counter trend rally, probably back up to this area up in here somewhere, 39, 35, 39, 45, something like that. And you should be literally looking for an opportunity to play that. Now, the best, most amazing signals for those are when you get the very tight transition days before, right? Like right here, right here. Let's see, things like these tight candles right here before the next day goes counter trend. That's usually a really good sign that you're going to have at least another 4 to 5 days like these. 1, 2, 3, 4, 1, 2, 3, 4 before you pause out. 1, 2, 3, 4. those are things you're looking for if you're trying to do a counter trend trade, or you're looking at going long because you're just so familiar with going long all the time. These are the things that you look for is trying to get in when you see these little transitions. And it's the same thing, the opposite direction, of course, too. But you had almost 1, 2, 3 of these little hesitations at the top here before we start falling apart again. So yeah, I mean, like I said, we are in a downtrending market, and so you need to make sure you are adapting and trading the downtrend. That is just, again, my opinion, swings are not working right now. If they are, like really, it's a day trading, short term, zero DTE type environment. And if you're trying to do lots of swings or multi-week type strategies, good effing luck. Like I feel like you're going to be running, just banging your head against the wall. I don't know how many times for last 8+ months, 9 months, at this point, that people who've been trying to swing trade this and do longer hold strategy type things, it's been really, really tough sledding. So you got to adapt. That is what is one of the coolest things about the market is it will forever continue to challenge you because it's always changing. Right now, we're in the downtrending environment. Lots of people have never traded in that kind of environment before. And so they're taking their tools that they have, which is the market only goes up type tools, and they're getting their shit kicked in because they're not used to trading like that. I know, Logan, you've been killing it with the zero DTEs, and this is the environment to keep, working that game plan and using those tools that you got, because like I said, taking overnight risk feels like you just have no idea what the hell's going to happen every day, because it's just it's a crazy market right now.
Yeah, it really does feel more like gambling when you're going overnight, like, in my opinion. Granted, like, I've swung a couple things throughout this market, but just not very much. At least not since May. Most of everything I've done, I've just taken the risk off overnight because it's just, to me, not worth it. Now, granted, sometimes, like, for example, this is not a bad time to take a low risk, high reward shot at the market turning around, because like you said, we're 7 or 8 days on the downtrend, and we usually get some sort of little bump back up. So once we get maybe down to that, maybe down another 20 to 40 points to that 370 mark, it might not be a bad idea to take a shot at going long. But yeah, just something to keep in mind with everything. Especially
we want to get something like this, a transition candle, or like that, or like this, or like that, or that. We want a transition candle somewhere in the next couple, 1 or 2, next 2 to 3 maybe trading days, get a transition candle like that. And then if we open up green and above wherever that transition candle's prior high was, that's a really good low risk reward to get in, put a stop at, somewhere around the middle of that transition candle, and see what it looks like to go long for. And I look at it for about 2 to 3 days max, that you would see a retracement. And again, what's probably going to happen is not, because you just put back in play the short setup again, is, well, maybe you transition all the way back up into this 50-day moving average. But of course, this is going to start moving down over the next couple of days. And then once it gets there, ideally, if we're looking at shorting, it will pop just a little bit above that. And then when it comes back below, that's where you take your short. Yep. And see what happens. Put a stop above the 50-day and sell into strength. So you have a big down day, that's the place to sell. Keeping in mind, this is a singles and doubles environment. Trying to get greedy, having life-changing trades come through is, short of them being on literally the downside. This is an environment where, in my opinion, you work on honing in your skills, and you look at creating consistency and having a plan. You come in prepared every day, have your plan, and make sure it is not an emotionally driven deal that you're doing, because you are bound to lose if that's how it goes. There just isn't there's very, very, very little. In fact, I don't know any trader who has been successful long term that comes into trading without having a game plan for the day and then trades based off emotions. You will be betrayed by your own emotions every single time, unfortunately. And that's coming from experience. I'm doing it myself many, many times, making dumb mistakes and choices, and based on emotional trading. So,
and there as well, when you come to the market with that mindset where you don't have like your thesis besides just how you feel, that's like, it's almost at that point like you'd have better odds, I feel like, just going to the casino
You quite literally do. I would fully agree.
Like,
It might be more fun too.
it really
Honestly.
might be. Like if you don't have a thesis, because that's the whole point of the, even when it comes to like the markets and taking risk or odds based trading or whatever, like that's the whole point. And if you read Trading in the Zone, for anybody who's listening, that's one thing that he touches on the most is like you're going to win a lot, you're going to lose a lot, but it all comes down to what edge do you have on the market and how are you utilizing your edge to make money. So I don't know, it's pretty interesting when you think about it that way, because it just takes that, like, it makes me think the last thing I'd ever want to do is log in and be like, oh, I feel like today is going to be red, so let's put a let's buy a put or something. So
Sure. Yeah.
no, but is that everything you want to touch on in this video?
I think that's it, man. Yeah, I would just say from a timely perspective, it's September 22nd and we're multiple days down, probably another day or two. Keep an eye out for that transition candle. And if you don't believe me on how that works, go do your own studying. Look at stocks, look at indexes, look at how that's been going for roughly, the way the patterns and the movements are working, and get your brain just drilled in visually to what that looks like. So you don't have to, have your feelings manipulating you into thinking it's going to be up or down that day, but it's just pure data that's rolling through. I mean, the faster you can get yourself into a position or a place where you can be in a space where you're just reacting based on already done preparation that you've taken place, the much better spot you're going to be in long term with this. So yeah, that's all I think. I think that's all I want to cover with you. Well, let's do options shorting, or rather taking advantage of the markets via options if you want to go on the short side on the next one, and because there's certainly some more nuances to it than the stock shorting.
Let's do it. Yeah, next time you're available, we'll top into it, because that'd be super interesting to see the different strategies, and then also setting up your stops, because I would assume the option side of things when it comes to versus the stock side, that you have to be even more strict and strategic about your entries, because a 1% move on a stock like Tesla, let's say if you call credit spreads, might be a 10% reduction on your options trade, right? Like,
right.
You're going to have different parameters, but also you can take on less risk when, you don't have to put up 10 grand to get that 5% downward movement to make $500. So,
right.
A couple things.
You're using leverage, that's for sure.
Using the leverage part. So I really appreciate you coming on for another video. I'm excited to see how everybody likes this one. If you guys have yet to leave a like on this video, do it now. But that is going to be everything for Uncle Luis and I in this video, Halcyon. So, yeah, Uncle Luis has been a great trader around the community for almost 2 years now. Isn't that crazy?
Has it been that long?
Yeah.
That's hilarious.
January 2020.
I've been trading for 2 years. Maybe a little bit longer than that.
Maybe like add another 14 years to that.
Maybe something like that.
Uncle.
All right, my man.
Well, it's been real, and I appreciate all the support from everybody watching this, and we will see you guys in the next video.